Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 17th of November. Starting off with Arkle, which looks as though some signs of life. Obviously, we've had a few false dawns over the course of this year. Obviously, the situation in January, and then spikes higher. Maybe this time, though, it might be seventh time lucky, or whatever number we're on at the moment. Broke that line of resistance from last month and the 50-day moving average of 0.82. Above that, got a chance of retesting September resistance and maybe up to that April resistance line projection at 1.4 pence over the next 2 to 3 months. One of the stars of the moment coming up is Bay Capital. Here you can see that we're still edging up towards the technical target here, which keeps rising. Actually, we've got that line of resistance there from the end of September. That's currently pointing at 40 pence, and that is a level that we might see before the latest stellar run finally runs out of steam. But we had that buy signal on the break of 20 pence, break of the initial resistance there just a few days ago. In fact, last week I think it was. So that is looking pretty impressive. At this stage, anybody back below the 28 pence level, delaying the prospect of 40 pence over the near term, maybe the next week or so. On to a stock where we've seen proposed NEDs who looked to be quite well qualified. The situation here on the technical point of view is that we've got an uptrend line there from the end of July around the 12-13 pence area, so that could be the area where the shares find support. I suppose worst case scenario is we have to go back to the 200-day line rising at 11.5 pence, but while that's rising, the bias and the momentum is still to the upside. So let's see whether the shares finally find some support at the moment. Otherwise, just wait for a break of that resistance line there from November at 14 pence on an end-of-day close basis. Moving on to GCAT, otherwise known as Caracal Gold. Here we've got a situation where there are multiple support points as suspected towards the 1.2 pence area, and the share's broken that line of resistance with today's expanded license, so it seems to be quite impressive. Breaking that line of resistance from October around 1.25 pence, and the longer we stay above that, the greater the chance of a move towards 1.5 pence again, which was resistance on the way down, maybe by, over the next 2 to 4 weeks, something like that, or maybe a bit sooner. On to Harland and Wolff, which is a famous name. On the stock front, though, we've just broken through the 200-day moving average at 28 pence. Above that, on an end-of-day close basis, you could see the shares up to 36 pence, which is that May resistance line projection. Nice turnaround that we had after a sort of successive new lows over the August-October period. But breaking that line of resistance from back in May started the rally, and it seems to be gathering momentum at the moment. On to Jubilee, which has had an update today. Been a bit slower, I suppose, since the May peak near 22 pence, but looks like the shares are starting to gather some strength. We're sort of crawling along near the rising 200-day moving average at 16.8 pence. Want to see a break of that May resistance line at just under 18 pence to take us up to a retest of the best levels of the year at 22 pence, perhaps by the end of next month, as things stand. Maybe a little bit into January, but sometime around the turn of the year, that could be possible. Moving along to Mode, which has gone delivered a more attractive package for Bitcoin traders. And here we've got a situation where shares did get very oversold into the low 30s there, but we've had a bounce for the stock, or bounce for the RSI off that line from September, bounce off that support line there from February, which was around 31 pence or so, and we could still see the shares head up to at least the 50-day moving average in the upper 30s. Best case scenario target at the moment, I suppose, is the 200-day line at 46 pence, maybe on a couple of months view. But the message here still is the divergence between the share price and the way that the cryptos are still near the highs despite Tuesday's wobble. Moving along to a stock which could be the next KEFI, in the sense that there's a decent bullish divergence here. Had the lower low there just in the last couple of days, but the RSI bouncing higher, and a clean break of that resistance line there from June could take the shares up towards 20 pence, maybe by the end of next month. If you're cautious, you wait for a clearance of the 50-day moving average of 14.5, but we've got some decent bullish divergence, as I said, so possibly an early bird opportunity there on that situation. A few situations where I've said the stocks become very, very oversold. Nanosynth is now in that particular game. We had Tirupati earlier in the week, which was the most oversold since it came to market, I think on Monday, Tuesday. Here at Nanosynth, we're now more oversold than we were back in June, where we had that sort of dip into oversold territory, double dip. Here we've gone lower than that, and that might mean that we're due a rebound for the shares, if only up towards the 0.8 pence area. Which is the area of the 50-day moving average. So maybe a quick rebound there, especially while we hold above the 0.5 pence area, which has so far been support, or the support area for the shares. Mighty and chunky contract win for Open Orphan today, I think 5.1 million. And the market being the market, it's not rewarded the stock maybe as much as it should have, but we bounced again off that July support line around 18.5 pence. Above that, looking for the 50-day line initially at 21.5 pence, and hoping that we'll get a weekly close through that to then open up the prospect of a retest of the 30 pence area and the 200-day moving average maybe over the next 1 to 2 months for Open Orphan. But the base building there since August seems to be very much complete, especially if we take into account the news, the positive news that the company has delivered. On to Panthera, and looked at this a few times, but no harm in looking at it again. We broke that September resistance line in the 50-day moving average at 11.3 pence. We're now up at the 200-day moving average, and end-of-day close above that around 14.5 pence. Could take the shares up to that March resistance line at 20.5 pence, perhaps by the end of next month. Certainly looking strong while we hold above 12 pence, which was the initial November resistance. On to a personal favourite, a stock which continues to fascinate me, quantum blockchain, on the basis of obviously the hopes of quantum computing. Here we've had a nice hammer candle yesterday and bounce back from that. A sort of bull, it looks like a mid-move bull consolidation, something which should take the shares up towards the top of the rising trend channel from back in March, as high as 5.5 pence, while we hold above yesterday's low at 3, and 5.5 maybe on the cards for or by the end of the year. Finishing off with a stock which is, I think, had a few stones thrown at it by the bears, but quite good to see that it's shaken them off with a 23% rise so far. Nice consolidation there just below the 200-day moving average at 2.1 pence, and above that, on an end-of-day close basis, we could still easily retest the best levels of the month to date, around 3.25 pence in coming days. That's it from me today. More updates tomorrow.